the podcast. Super excited to have Jerome Faury from Immersive, one of our portfolio companies, visiting us today in the office, which is always a treat. Welcome.
Thank you.
I know you had a long journey from New Zealand. Tell us a little bit about your travel.
Well, first off, there's a direct flight from Auckland to New York. So 17 hours.
17, that's nothing.
Yeah, when you're in New Zealand, everywhere is a bit of distance. So I'm doing 7 countries in 7 days. So
a road warrior.
Auckland, New York, Paris, Belgrade, Munich, and then doing some skiing in Kitzbühel.
But it's work skiing.
It is work skiing. It is.
Right.
It's a Mastercard event. A number of our partners are there, and a bunch of prospects that we'd like to engage with are there as well. So there's going to be some thought leadership. There's going to be some great connections.
Bunny hills. Keep it easy on the downhill, okay? I don't want to hear about injuries.
I know. I should probably snowboard as opposed to ski, but
snowshoeing.
Oh. I'll enjoy myself. But I'll look after myself.
I remember when I last saw you, I feel like that was Abu Dhabi last year, and you said from New Zealand just to get past Australia is how many hours of flight?
Oh goodness, it's like 10, something like that. Yeah,
it's crazy. Well, very happy that you made it here, and very happy to dig in a little bit with Immersive. So maybe kick off by telling us a little bit of your history and then a little bit of the origin story for the business.
Yeah.
Where have you been? How did you come about? How'd you get into this space?
Yeah, cool. So my father was a programmer, and I grew up around computers. At the age of 7, I wrote my first computer program on what was then a green screen on an Amstrad. So always been into tech, always loved how it worked. I used to read books on, how computers worked and processes and all that kind of stuff as a young person. I got into payments in, must have been the late 90s. And where I've always specialized is in what I would call the last mile plumbing. And I guess on the innovation front. So back in those days, Windows started becoming the dominant point of sale kind of operating system. Previously the big petrol stations and the Walmarts of the world would have these IBM type systems and a POS, and a small retailer would have a cash register. Then you got these point of sales that ran on Windows, and what they want to do is integrate the point of sale with the payment terminal. So we developed an ActiveX control that enabled the POS to integrate with the payment terminal. We then took that and essentially created, I think, some of the world's first e-commerce. So this is like 1997, just for some context. And then in 98, we did an e-commerce payment where essentially we wrote some software so that a Linux daemon essentially could be run on the client side. It was Great Plains, actually, for a supermarket that was going live, and airlines would run this type of stuff. And then we wrote software to manually enter the card number into the payment terminal, so the banks thought that someone had done what they call a mail order, telephone order transaction. That's how we did the first e-com back in 1998. Then we used to sell these boxes, hardware and software, with your typical license fee, traditional model. And the founder, who was probably one of the most innovative geniuses in the world now today, actually in payments, came up with software as a service. So in 2001, we basically aggregated everything onto one piece of infrastructure, and we onboarded multiple customers, essentially into what you'd call now as SaaS. And this was revolutionary. Like 2001, this was very early days. And I remember at one stage, we were onboarding both Qantas and Air New Zealand. And these are big airlines, and they process very large volumes. And the thought of both of their customer data essentially being in the same database
was revolutionary.
It really was, right? And so we'd started doing SaaS-based payments back then, but it enabled us to really innovate at pace. So that was the power of it all. Having the shared infrastructure means we could add new features and really scale, and then all the partners would get the benefit of that. Then in sort of 2005-ish, worked with Citibank on a deal to set up this retailer called Apple. So they had these massive projects, global teams. They booked out 2 floors at the Hilton in Sydney. It was like 2 years. And I remember talking to the CIO at the time, and we were charging them millions of dollars. And at that time, the banks in Australia would give you a payment terminal for free. And I just asked them, I've got to ask what, because they want to do transactions over the internet, and they want to do transactions from iPods because the iPhone wasn't out back in those days. Why are you spending all of this money for us to build basically a switch, certify it with a bank, bring these new terminals in, get regulatory approval to do payments over the internet? And he said in a very deep Irish accent, and I wish I had an Irish accent that I could pull out right now, but I don't. But he said it's all about the customer experience. 2000, well, it's probably 2006, 7 when I asked him this question. That really stuck with me. They wanted to be able to take payments away from the cash register. So those Apple stores were crazy. You remember when they came out and then there were the queues outside for days, I think.
Days.
Days. And the number of transactions these guys were doing was just absolutely phenomenal. And McDonald's used to have a saying, or a stat at least, that for every 6 seconds they could save at a point of sale, it delivered 1% to the bottom line.
Wow.
So they had to look at it from a financial metric perspective. So that's why missed key errors and time. But Apple was all about that experience. That was just embedded in, obviously, the way they design the products and they deliver the product, but also how they did the retail store. So I did that. That company's still hugely successful now. It's processing hundreds of billions of dollars a year.
Wow. One
of the largest players in the space globally. Actually, the guy Andy, who founded and owns it, he's got a townhouse up at East Side that he spends a lot of time in. And then in sort of 2016, 17, I got into Web3 payments. And I did a deal with Verifone and Ingenico, who are 2 of the largest manufacturers of payment terminals globally. And similar to the Alipay, WeChat Pay, I came up with a model that essentially enabled them to talk to an endpoint to generate a QR code that they could present. But instead of having one app that could consume that QR code, any app could consume it. So Web3 wallets, and one of them at the time integrated with us, could scan that QR code and then talk to another endpoint. And we built a system, banking infrastructure outside of Visa, Mastercard rails, so our own network, and essentially enabled any app to transact anything, including crypto, on any device. Because what merchants don't want is a new integration, a QR code off to the side. Everything needs to be integrated from a reconciliation perspective, staff training them, staff phones. Simplicity, right? It's just got to work natively. You got to try and bring these things together. And so we did that. We even created an NFT very early on, I think. So 2019.
Get me excited.
Mate, we tokenized Coke. So Coca-Cola ended up investing in this company on the back of this. But the way I looked at it is, Coca-Cola distribute their products, via retailers and distribution networks around the world. But they don't actually have a relationship with the end user. They've got it with the petrol stations and the supermarkets, but not with Dan or Jerome. And so I thought, well, if you can digitize your products and distribute your products digitally, direct to the consumer, and if you can influence that consumer to drive them to your retail partners, when you're competing against PepsiCo as an example, and one of the first point of sales to integrate with us was Vista, who have about 50% market share for movie cinemas. Then instead of being a cost, you can be a sales channel, and the value you get from engaging directly with consumers, is massive, right? And so we created I guess what's called now reward asset, an ERC721,
yes,
that you could put into your Web3 wallet, and then you could transact that on Coke vending machines and at point of sale systems and all this kind of stuff. So this business ended up being hugely successful. I ended up selling it for about 35 million US. But one of the challenges with that business is you had to onboard both consumers and merchants, and so merchants would say
B2B to C.
Exactly, and it was really painful because consumers would ask, "Where can I spend?" and merchants would say, "How many consumers have you got?" And
chicken and egg.
It was a grind. And so then I started seeing these things going on in crypto, particularly FTX, Voyager, Celsius, all this type of stuff. And I thought to myself, what if we found a way where consumers could transact directly from their Web3 wallet without trusting a third party, without a bank, without an exchange, without even trusting my company. And so I ended up thinking more about this, and I was working with Mastercard on another project to help female entrepreneurs in Fiji basically accept payments on their phone, settle to a Mastercard, so that
female entrepreneurs in Fiji.
Yeah, micro SMEs. So this is COVID's all happening at this time. Tourism's taking a hit, and there's a lot of these micro SMEs, and in Fiji it happens to be predominantly females that arts and crafts, and they sell them on the side of the street, and they the Australians and Kiwis go there and they don't have dollars on them, they just want to tap a card due to the convenience, but they don't have bank accounts. And so I was like, okay, well, how do we build an acceptance device on an Android phone, essentially, and instead of settling to a bank account, let's sell it to a prepaid card. And so this was my first relationship with Mastercard. I'd historically always been a Visa shop. The previous company, I put the first direct link into Visa for a non-bank in the world, and D Hop, the founder of Visa, is a big sort of idol for me. I've read all their books. It's the original decentralized business, actually, which is kind of interesting. I'll talk about. But what I did is I met with Mastercard, and I figured, well, if I can bridge Web2 and Web3 and bring the best of both worlds together, then I think we were onto something. And so for me, the Web2 thing that was really good is, one, you've got 100 million places where you can spend these cards, reasonably ubiquitous globally.
Yes.
You also get the protection that if you go to Nikes.com instead of Nike.com, you can do a chargeback and get your money back, so you're protected as a consumer. But then Web3, there's obviously a whole bunch of benefits with digitally native money. You can obviously send it instantly to anyone. I think compliance has a whole bunch of value you can do as well with on-chain transparency. You get trust and transparency at the same time. And so I spoke to Mastercard and I pitched this idea to them. Actually, at first, the person that came on the call was actually going to say no to us, but I even ended up meeting with the CEO, Michael Maybach, here in New York. At the time, Visa was the main crypto shop. 9 out of 10 cards in the crypto space were Visa cards. Mastercard was very big on buy now, pay later. And what they were looking for was some leapfrog technology. And so we ended up, Mastercard funded this. They've been an absolutely great partner. They flew their crypto experts from around the world to this location with the founding members from my team. And we figured out how can we do transactions in less than 1 second by tapping a device or card on chain in a decentralized way. And so for me, it was always about the values of Web3. It's around, my data, my digital identity, the democratization of things, and decentralization. It's a lot more equitable than the sort of centralized sort of models. And so I was like, okay, well, how do we bring the values of Web3 and the tech of Web3, integrate it with this Mastercard network? And we got all these experts together, and we ended up, and
Immersive was born.
Immersive was born, yeah. And,
why only one eye in Immersive? It's missing the final eye. What's the story?
Well, I could get the .com as the short answer, and the registered trademark.
All right.
I actually think it looks better as well.
I like it as well, but I'll tell you, there are people even within our company that are constantly misspelling it, so I have to tell them it's not Wheel of Fortune, and you don't get to buy extra vowels. So Immersive is launched. Let's dive into a little bit of this dynamic, given that you had worked with Visa to great lengths, and now MasterCard is inching forward. So tell us a bit about that dynamic, because while Visa has historically been the bigger player, your perspective when it comes to Web3 is unique in seeing how each of them have moved, both in terms of how they staff their organizations, the willingness of the executive suite to push forward with crypto. Maybe that changes with a new regulatory regime in the United States later in January. Tell us how you've sized all that up.
So the way I looked at it is, at the time, there was a changing of guard at Mastercard. And the new CEO was very vocal around his support for blockchain and digital currency. So I knew that he wanted to make a mark strategically. And from the top down, if the CEO's on board,
that helps.
Things happen, right? And when you're innovating, it's always in front of regulation. Regulation plays catch up to innovation. And so a couple of things that are good, having that partnership with Mastercard, when regulators, and we're a regulated entity by central banks or similar around the world, when they see that you're a principal member of Mastercard, that you settle directly with Mastercard, that you contract directly with Mastercard, that you meet Mastercard's compliance requirements,
right,
which in some cases are actually higher than local regulation, that gives them confidence.
Seal of good housekeeping.
It is, right? They do a lot of due diligence on us. We have to have capital with them, for a week or so. We need to meet their crypto onboarding requirements, which is enhanced due diligence. There's a whole bunch of stuff around risk, fraud that we need to meet, obviously staff and capability. But payments and almost anything in life, really, nothing's more important than trust.
Right.
And so you want to innovate and you want to be legally compliant. And those two things often are at different ends, because on the innovation side, you want the user experience. And then the regulatory
seamlessness.
There's a natural tension. And so you want to bring that bridge close together. How do you have a really elegant user experience? And so now within Web3 wallets, we can onboard a new user all within the app in under 90 seconds.
Wow.
I think there's further optimizations, particularly when you get trusted, verifiable credentials that you can share. You won't need to do the passport and the selfie and that type of stuff. But we've done optimization so that the user doesn't need to enter their name. We can get that directly from the passport as an option. We also don't require them to enter their or upload any utility bill or similar for address verification, because we have integration to trusted data sources. So when you put your address in, like a credit bureau would look at it, we can see that, yes, you are
paying the cable bill.
At this
Maybe
address.
they're not paying the cable bill anymore. There is no cable bill, but they're paying some bills for power, electricity, broadband.
100%. We don't ask for a username and password, right? That's a very Web2 way of doing things. All the on-ramps now pretty much need a username and password. If you want to transact over $1,000 with us, you can sign in with Ethereum or sign in with Algorand or XRPL. So we use Web3 authentication for the user. So you make these optimizations, and then I think we're probably the most compliant company, because when things are on chain, we use chain analysis, so we can do PEP checks, sanction checks, nature and purpose. We do so many more checks, and we have such greater visibility over the actual user, because we do enhanced due diligence, over the currency itself because it's on chain, and we see the entire flow end to end. So you have this really high level of compliance with this really elegant user experience, and all they need to do just tap the phone and spend, but you're spending on chain, you're spending crypto. The merchant doesn't even know it's crypto. There's no fee to use the service, because we generate our income through this fee called interchange. So we charge a financial institution accepting the card.
Yes.
And so as I said, the original kind of promise, that bridge. And if you look at our logo and branding, when I was talking to our designer, I said, I want a bridge, because on and off ramping for me was a bit like going to a foreign country. I lived in Japan for a while, and I remember taking the train there. So you go from the site, the fiat to crypto for me was a bit like going from a locomotive to Shinkansen in a foreign country, in a train station with a foreign language. 2017, 19, whatever. It was all very complex, seed phrases, all this type of stuff, right? I was like, I want a bridge. So when I go from, like in Europe, when I go from country A to B, I just drive over.
Right.
And the bridge that I wanted was the Bifrost, from Thor. That was the fastest bridge I could think of. And so, you're an artist, you'll appreciate that. Derek Lockwood, who was the creative director for Saatchi & Saatchi in New York, happens to be a Kiwi, and he's my design guy. And so he, I know you can use AI and all these things, but all of our designs are done by hand. And so we've got a hand design.
As they should be.
They're done by hand. So,
by a Kiwi.
By a Kiwi.
Even better.
He's the Kiwi that came up with the love marks for McDonald's, and I'm loving it, and all that kind of stuff. So, he was their global head of design at Saatchi & Saatchi, and he did it.
Well, Americans are loving it, okay? And they're loving it a bit too much. That's why we have an obesity epidemic across the country. You mentioned Qantas and Air New Zealand. So I take it that you have preferred status with those airlines. They must love you, given your travel. Is there one versus the other that you prefer?
Look, our national bird in New Zealand is the kiwi, and it's a flightless bird.
Meaning?
It's got no wings.
Doesn't leave the ground.
However, the people...
You can say that I'm a flightless bird then, right?
Well, if you
want to try that at
home. But we're explorers, we're innovators, we've been big exporters because that's how we're very far into the world. But we're the first to do a free trade agreement with China, as an example. We've just done one with UAE. When countries want to do free trade agreements, they look at New Zealand as the global exemplar in this particular space. From a financial and money perspective, we were the first country in the world to openly float the sovereign dollar. The New Zealand dollar is 2.1% of all trade currencies globally. The inflation benchmark around 2 to 3%, that was from the Reserve Bank of New Zealand. So, you've got this kind of environment where we like to export, we like to travel. There's a lot of senior New Zealanders in senior roles with major companies all around the world. One of the co-founders of Tesla was a Kiwi, as an example. The top guy at GM was a Kiwi. We enjoy exporting. We enjoy lots of different cultures. We love traveling, and I've got, I think, 6 different airline apps. Crypto by nature is hyper global. So we need to be hyper global as well. That means I spend a lot of time on a plane. I think last year, just for some context, I did maybe 100 plane trips.
Wow. Like that. That's a lot of time in an aluminum can. But you look okay.
Oh, look, I love it. I love going to different countries. I've been, it's randomly bumping into you at Abu Dhabi, but I love the UAE. I think the UAE brings the best of a lot of the places I enjoy most. And New York is definitely a top 3 city for me by a long shot. I love the drive. I love the energy. Obviously, the financial markets. New York is amazing. Singapore is very clean and safe. And then, you got Maldives, beautiful beaches. Now you go to UAE and they've imported the Maldives sand at Satia, beautiful beach.
Literally.
Yeah, they have. The regulator there is the most advanced regulator in the world and the easiest to engage with. They have monthly kind of drinks that they sponsor because they want to get to know founders and entrepreneurs who are innovating as people. They don't get you to produce a 1,000-page document that ticks a whole bunch of boxes. When I sent our business case for ADGM approval...
ADGM is the regulator in Abu Dhabi.
Oh, yeah, it is, sorry. The regulator came back to me and asked, do we support ERC 4337? So it's account abstraction, and basically means you don't need a seed phrase, and it's a lot easier to sign up as a crypto user. A bunch of other stuff as well, I guess. But and if we don't, do we plan to? Because it provides a better user experience. Now, I've never had a regulator ask me about ERC XYZ or the user experience. That just hasn't come up at all. Great, and I went to a conference with Binance that was amazing last year, and they had the regulator from El Salvador there, and they're a specialist digital asset regulator, and the way he positioned it is like having a standard regulator oversee crypto is a bit like taking your Tesla to a traditional mechanic that understands carburetors and combustion engines. That yes, they're both mechanics, and yes, they're both cars, but there's a pretty significant difference.
Right. One has thousands of parts, one has far fewer parts, and no engine.
100%. Like US is a good example. So in the US, if you want to issue crypto cards, basically you need a BIN sponsor. In order to do that and to be that provider, which we are in multiple markets, you need to have FDIC approval and be a registered bank. Now, yes, I understand why you need FDIC approval if you're holding onto users' funds and taking deposits. But when you're transacting and providing this bridge from the user's wallet that they control to the Mastercard network, and at no point do you hold on to consumer funds, then it doesn't really make a whole lot of sense. and a lot of markets that require even the Central Bank of UAE, they require 6 million dirham on hold if you issue cards, because of this notion that if you issue cards, you're holding on to some sort of value for the consumer. And so with ADGM, when I positioned what we'd essentially invented, so we're the first in the world to do this, we had a whiteboard session with them, and they're like, oh, okay.
Whiteboard session with the regulators.
With the regulator, yeah. Look, I go to dinner with them. I have, one of them was actually over in Miami for New Year's, and so and New Orleans, sorry. So I messaged her, when everything went down over news to make sure she was okay. So you have this relationship, and you can have open dialogue, and that's how you can innovate and regulate and bring that gap together. Because
spirit of engagement.
It is.
Is there a sense in your network and those in New Zealand that you will have a new opportunity for engagement with a new administration, David Sachs as a crypto and AI czar? What is your perspective? What is Mastercard's perspective, since you interact with them so much?
In the last 6 weeks, we've had significant engagement with Mastercard. They've been really supportive. They've had a bunch of their banking partners sort of reach out to them, and I guess vice versa.
In the United States?
In the United States.
So just in the last 6 weeks, post-election results, you've had U.S. banks that had largely given you and others the hand, now beginning to turn the page and contacting Mastercard or you and others directly, asking for what? Asking to meet, asking to explore partnerships?
Correct. So they want, there's a couple of things, right? So the largest sort of Visa Mastercard partners globally, I think the largest has about 50 million cards on issue, something like that. I think it'd be Citi or Costco, Walmart, something like that. Those are the biggest customers for these schemes at the moment. Now, we've got 2 partners that have over 100 million users.
Immersive has 2 partners, each of which has over 100 million users. So
Correct.
That is an order of magnitude compared to the historically large issuers on those card platforms.
Yeah. And
because I was going to ask you about the quantum here and what the addressable market is. You're saying that is already in the hundreds of millions.
Correct. So, the partners that we have onboarded now that we're either actively contracting with or integrating, or they've shown a strong interest to work with us, that's north of 400 million users. Now, let's say you can onboard 20% of those users.
400 million ex-US?
It's hard to say exactly what the US number would be, but you could probably go with a 20% number, something like that would be US, right? So you got 400 million, call that 80 million, 20% adoption over a 3-year period. That's 16 million cards that we could issue in this market. Crypto data is also very different. So crypto users spend twice as much on technology, travel, and I think transport in general.
That's just to get to the crypto conferences. Forget about the rest of their lives.
Yeah, exactly right. So they spend twice as much on that. Their average card spend is also twice that. So average card spend's around, it varies, but globally it's around 2,000, but on different card types, call it 8,000 in the US, but they spend 16,000. And so these banks now can get these massive amount of users without having to do any work. Right? These partners have already integrated with us, so we provide all the technology, they provide the license, and their ability to earn income is high. But the other thing that they get a lot of value and benefit from is they historically, they can't attract top technology talent to the bank, right? There's no innovation happening in banks. If banks think they can innovate, or any large company thinks they can innovate, then I think they're just kidding themselves. To innovate, you need to be able to make decisions, to be decisive, to take risk, and to look at risk on different metrics, right? So first off, what is a specific risk? Don't just say, well, risk and compliance, and that's not enough. What is a specific risk? What's the likelihood? What's the severity? What's the mitigation? And just as importantly, what is the upside? And then based on that information, you make a decision with the right people in the room that can debate these things, and arguably with 70% of the information. Because if you try and figure everything out at the start, by the time you figure it out, it's it's too late.
Right.
You got to kind of go and adapt. So one of our core values is adaptability. It's very, it used to be about IQ, then it was EQ, now it's AQ. Your adaptability quotient is key, right? So you got to ingrain that in your culture. And so these large banks can't do that. And so by partnering with companies like ours, then their team can get exposure to innovation. That they can learn what's happening at the forefront of, sort of money, payments, currency, what's happening globally, what's happening in regulatory. Like, we deal with, goodness, I don't know, maybe 6 regulators at the moment, right? So I can see different things in different markets and how things are going that they historically wouldn't get that type of exposure.
Right.
So the learning and value that they get from engaging with us, I think, is probably greater than the income they get. It's not the best customer is not the one that spends the most; it's the one that teaches you the most. And so I think that's what we're going to start seeing in the US. Is banks are going to want to remain relevant to consumers. They're getting absolutely smashed on multiple fronts. Right, on the consumer side, you've got big tech. Google, Apple, Facebook. Potentially X, all looking to get into payments. Really hard to compete against that on the consumer side. On the other side, you've got acceptance innovators, Stripe being the most obvious one. And then you've got the Revoluts of the world coming in here as well, right? And then you've got this dilemma, this black hole of innovation. They have these, I don't know if they still do it, but for a while there, banks had these kind of hubs, these innovators, and they had, the hipster that
they still do.
They still do that. Nothing happens, right? They chuck bugger all money into a project, so they don't fund it properly. They don't allow the project to actually innovate, so it's still got the same governance that everything else does. And then they don't integrate it into the bank, so they don't distribute it.
But it looks cool.
It's just such a waste of time.
I want to go back to our comparison of Mastercard, for which you are a principal member, and Visa, given your relationship. Tell us a little bit more about the dynamic of how you see each of those big companies, which were written up in Barron's, the investor magazine, just a week ago, as potential picks to continue watching, along with Amex in 2025. Tell us how, your perspective, Mastercard and Visa.
Look, in simple terms, I would say Mastercard is more of a technology forward business, and Visa is more of a brand.
Visa is everywhere I need to be.
So is Mastercard. Amex is different. Visa and Mastercard are networks, essentially. They get data from A to B and they settle between party A and B at a scale that's unprecedented. Amex actually holds on to consumers' funds. And so they're a registered bank in the US. And so they're naturally going to be a bit more, risk adverse because of their structure. Mastercard.
And they've also targeted a different clientele, right?
Correct. Yep.
Amex has historically gone for upper class, upper middle class. Visa and Mastercard have a much broader base and more users, more points of sale.
Correct. Yep. And particularly corporate and travel and that type of thing with Amex, right? So, fundamentally, I don't, from our perspective, there's probably not that much difference in, call it, the product or service. Where I see the big difference is, one, you've got the CEO at Mastercard who is extremely pro-crypto. On the back of that, they have the larger out of the two networks teams and budget and investment in crypto. So they've got global crypto sales teams.
So in terms of personnel and allocated resources, you're seeing a larger footprint for Mastercard than for Visa.
Yeah, look, if you look at all the sort of card products coming out now, whether it's from exchanges, wallets, that type of thing, where I first engaged, 9 out of 10 were Visa cards. I would say now quite easily 9 out of 10 are Mastercard. And they're very open. They referred a business to us. It was a meme coin, right? A very cool meme coin. And they wanted to do basically a Web3 Mastercard. Now, I don't know if you've done crypto onboarding for a DAO or a foundation based in the Cayman Islands with the CEO who has one of those kind of anonymous kind of looks. It's not easy.
No.
And you got to have the right partner. And Mastercard, their compliance team's like, okay, well, how do we do this? Okay, so what's the DAO sort of governance and token structure like? How does voting work? Amazing. Like,
they wanted to figure it out.
They want to figure it out. Like,
they wanted to do it the right way.
It's new for them. It's obviously very left field. I mean, it's new for us as well.
It's new for all of us,
right? But that willingness, and so the difference for me is in the people. They've got these amazing people, this real willingness to support and invest. I mean, they've invested millions in our company to support us, right? And it's very early days for us, right? So, I'm confident they'll see a return on that investment, but they've had to put a lot up front to get us up and running, to certify us, all this type of stuff. And yeah, it's the people. I mean, Visa's got great people as well. I've dealt with them over the years, but right now, if I look at the two teams, the investment that Mastercard's making into crypto and its people and its processes are just significant, and that's from the top down.
It's amazing insight. So let's talk then about where Immersive is today. Precipice now of 2025. Tell us a little bit about the process of fundraising in the past, and the team that you've assembled to date. And if you look out over the course of the next 12 months, what is on the horizon? What does success entail?
So we name each year. So for us, 2023 was about cap raising. We needed to get the capital to build this thing, right, which is a very, very ambitious project. Like, there's no global card issuers as a service in traditional payments, and definitely not in crypto, that multiple regulators or all the rest of it. So this was ambitious as fuck. Then the next year for us was all about the platform. So we had to build the platform. We're very lucky. One of our first customers was a large sort of exchange, but they had some very unique requirements that we needed to build that were specific to them. And so we did that. We built the platform. We did the first Web3 transaction on chain. We figured out how to get everything working. So that was kind of cool. Last year for us was all about the year of the customer. So it's very much about sales was the priority. So 80% of sales happen after the fifth contact.
Wow.
That's sort of the general rule, right? So, and sales is a contact sport. So
yes.
100 flights.
Got to kiss a lot of frogs.
You got to kiss a lot of frogs, right? You got to be there. You got to be at these conferences. You got to be front of mind. So yeah, lots of sales activity. So we signed up.
Do you find that your Kiwi accent is a unique?
Well, according to possibly, I don't know, maybe it was a Kiwi run survey, but apparently the New Zealand accent is one of the world's most attractive accents.
I would agree with that. I have set my Google Maps to a Kiwi accent so that when I'm directed to make certain turns, it's soothing rather than stressful.
I do find we talk, and maybe it's me as well, really fast. And I find in some countries...
Well, then you fit in great in the East Coast.
Here, people understand me. In some places that speak English, it's like I'm talking in a foreign tongue. They have no idea what I'm saying, and I need to get the other English-speaking people next to me to basically translate it. So where to sit? And this year for us is the year of adoption.
Year of adoption.
So I'm saying thrive in 25.
All right, I like that.
I was born in 77. That's year of the snake. Ooh. This is year of the snake. So I'm feeling good. We've got off to a phenomenal start to the year. Everything has been going better than planned.
I like that.
Yeah, it's been a phenomenal start. And for us, it's about adoption. So we've got these pretty large partners that we're onboarding at the moment. Multiple exchanges, multiple Web3 wallets. We want to do a few things really well. So we want to make sure that we deliver for those partners. One integration to seamlessly issue cards in 40 countries. So we'll work with those partners. We'll open up new markets like the US. We've just got approval for Latin America. We're going to do UAE as well, and then probably Southeast Asia. So that's sort of our priority, is opening up markets. As I said, Web3 is hyper global. We need to be too. That's what our partners need. So looking after that, handful of partners, I guess, but doing a really good job. So that's what we're going to focus on this year. 2030, if you want to look at our North Star. So our strategy is designed so that by 2030, what we want essentially is 5% market share globally. We want to stay being the category leader in the space, but if you say that, a billion people are going to have crypto by 2030, 5% market share means 50 million cards on issue. And basically that will, for us at least, generate billions of dollars in revenue. So that's our goal. How do we get 50 million users onto the platform by 2030? And everything we do is designed to galvanize the team together. We have 4 development teams.
Really?
Yeah. So,
well, tell us a little bit about management, because you mentioned earlier how much of your time is required for travel, and that means delegation, right?
Yeah.
You have to have enormous trust in those who are still in New Zealand, cranking, and perhaps elsewhere. Tell us how you've managed.
There's a couple of things we've done. So one of my first hires was essentially a chief people officer. In the old days, HR, I would say you hire HR once you've got 70 people. But, your best investment is your people, and attracting the right talent, creating the right culture, maximizing productivity. You want people to come to work with a smile, go home with a smile. You also want them to be challenged and learning, because that's when they thrive. I used to be an outdoor instructor. And So rock climbing, abseiling, kayaking, rafting, mountaineering. If you did a corporate event or a school camp, I was the guy that was responsible for your life.
So basically my worst nightmare. That's my worst nightmare, Jerome. Those are all the things when you think about along came Polly and they're doing the risk assessments, all of those. There's a reason why when you apply for life insurance, they ask a series of specific questions. Do you mountain climb? Do you parasail? Do you parachute? No, I do not do those things. It's hard enough to stay on terra firma, but you actually, opposites attract. Exactly. You're out there not just doing it, you're instructing on it.
Well, it was one of the best things to learn about business, because you learn a lot about risk management. Like back in those days when you took someone on a mountain trip, like for 4 days, you actually had to write. There's no phone or GPS, right? This is 96 or something like that. Or 95. Well, I'm going back a bit. Anyway, you had to write the route plan using a compass and a map on a piece of paper for every step. And so at any point in time during that trip, if I lost visibility, I could pull out the piece of paper from my waterproof bag, look at where I was, and basically direct the group to safety. So I understand a lot about risk management, a lot about strategy, but also about leadership. And if you've done an abseil, it's a really interesting psychological moment. So no one's died from a professional abseil in New Zealand ever. But people are so scared. And that first step, when you're sort of about to, have you done an abseil?
I just told you my list.
Okay, so you haven't done it. All right, well, maybe we need to take some of these.
Maybe with your leadership, I'd be willing to.
I think there's better people than me now.
Okay.
But people who do the abseil, they're so scared, right? Even though there's like double safeties and all the rest of it, it's a very nerving thing to do. That first step is really scary. But then what you find is when they're halfway down the hill, they start swinging out and, getting more comfortable and bouncing around. And then they get to the bottom and there's just this massive smile, and they're so proud of themselves and they're just, enthusiastic and glowing and the belief in the self-confidence.
Because they've survived.
Exactly. And that's what you need when you're an innovator, right? Like you need the Bear Grylls of engineers. Again, that adaptability. You need to be able to say to them, like when we're doing our thing, no one's done this before, right? Like we're inventing stuff. You can't Google, you can't ask a friend. You need to be, decisive. You need to be a good problem solver. You need to have resilience. You need to have tenacity. You need to have grit. You need to be able to make decisions, figure things out. That's not every engineer. The startup founder engineer, that's what we needed, right? And so we had to create this kind of culture that had a particular type of engineer that was able to operate in this volatile, uncertain, complex, ambiguous world. Innovate
and not just survive, but thrive.
Thrive in 25, right? So Mike was one of the first guys we hired. We've got pretty close to 100% retention across the entire company. I've also got 2 co-founders at Amazing. This is our second venture together. Matisse is the bridge between the customer and technology. So he's very good in front of partners, but then he can also write code. So an amazing coder. So he does that. Nathan is our architect. Nathan's probably the top in. I've worked for some of the largest technology companies in New Zealand, hired thousands of engineers, and done lots. Hands down, the best engineer I've ever met. Wow. Just a phenomenal engineer. Both of them into training stuff as well. Matisse was a world champ kayaker, and he's also kayaked off Hooker Falls in New Zealand, which is a big waterfall. Not quite Niagara, but that kind of extreme. Nathan's a triathlete, world champion triathlete. So those two are amazing. Our chief product officer is a guy called Gareth Cronin. Gareth is the ex-exec at Xero, very large accounting, software as a service business, big innovator in the space. He's probably the best product engineering leader in the country. We have Jordan Madison. She's a phenomenal head of design. So she's been in Web3 now since I think 2016, working with the likes of Ripple and a whole bunch of really massive projects. And so she really focuses on that user experience. And I mean, if anyone's seen any of our presentations, or you've seen our investor updates and all that, we take a particular consideration to design.
We notice
the attention to detail. Again, payments, you need to have attention to detail. So we do that. So she heads that up. Paula's one of our senior product managers. She's got 20 years experience in issuing and cards.
So it runs whether you're there, it runs when you are away.
Yeah.
And it's all by design.
Yeah. And sorry, just not to count anyone out. We got Matt, who's our CTO and looks after the dev team. So essentially, people don't really report to me. They say you hire people smarter than you and all that type of stuff. And so I've got this very strong leadership team. I've got a phenomenal board of advisors. I've got an amazing group of investors that also provide a lot of support and guidance and help on a bunch of different things. I think this is actually, if there's any startup founders listening here, I think leveraging investors is probably one of the best things that we've done for our business. No one is more incentivized in your success than someone that's given you their money.
Indeed.
And so, we are very open, very transparent. We spend a lot of time preparing for our investor updates. We tell them what we plan to do. We tell them where we achieved and also where we failed. We don't do everything that we planned, but we explain why we do that. We ask them for help. We tell them specifically how they can help. And I've got the most, we do these monthly updates. All investors are welcome to come in. It's very open. Each of the leaders talks about their area of the business. It's not just me, talking. Open questions. Everything is transparent. I mean, I think we do better investor updates than many listed companies actually.
No doubt about that. No, we've been impressed. And as you think about the path ahead that you've described, a year to thrive, and at some point, desire to continue expanding and growing, so require more capital, in addition to the existing investors, what does the next set of ideal investors look like to you?
This is interesting because our model is highly scalable. Like if you look at the unit economics and the cost to acquire customers, the distribution model via these exchanges and Web3 wallets, it's entirely possible that we can actually grow organically from revenues, depending on how the adoption.
Cue the great music.
Look, I love technology and innovation, but I also love business models. That's what I liked about SaaS, was the ability to, have one core bit of infrastructure, do lots of development, keep the cost down for users, but then once you've got critical mass, it's highly profitable and scalable. This business that we have has the potential to be highly profitable and scalable. So if we don't need to raise capital, if we can actually do it from cash flow, that would be my preference. I want to build a long-term business. As I said, we've got plans for 2030, but we've got a 10-year kind of strategy. We really want to generate this $1 billion of revenue. Now, we're likely to go and do a small round potentially in March this year. To get us a bit more capital so that we can hire some of these resources in some of these global markets. I want to have some senior leaders in the UK, Europe, GCC, UAE, Abu Dhabi specifically, and in Latin America and the US. So we do want to have some capability there, particularly on the business front, and some capability from a technology perspective as well. Thinking maybe Croatia, actually. I quite like Croatia, so maybe have a dev shop in Croatia, something like that.
We've worked with devs in Croatia. They're extremely talented. They're very efficient and certainly more affordable than the US.
Yeah. And
I also hear that the Croatian coast is beautiful and maybe we should have a working session there.
Love to. Yeah. Look, I think I'd like to have an office in Croatia for Europe. I think it'd be a cool place to build a team. It's obviously pretty central to things and ticks a lot of boxes. I think it's an up and comer, particularly when it comes to tech capabilities. So definitely on the cards. So yeah, bit of capital to hire some more capability in key markets is probably what we're looking for. But I think very rapidly, when we get the adoption numbers that we're anticipating, we'll be in a cash flow positive position. And then we can determine, do we actually need more capital? Can we go faster with more capital? And I'm at this stage, I'm 50-50 on that, to be honest.
Immersive remains one of the portfolio companies that I've been most excited about at Metaversal, in part because it is addressing this critical bridge. How do you get more of the traditional Web2 users, including my older brother, to start engaging with more blockchain-based solutions and applications? And I think it starts with that old red easy button. The easier we make the solutions, the more willing all of these folks will be to realize what we're focused on is not crazy. It is definitely the future. And you guys are helping to lead the way.
Oh, thanks. Yeah, I agree with you. I think you're going to see more adoption. If people know that they can simply spend their crypto just by using Apple or Google Pay card, then my view is they're going to be more likely to buy crypto. That's one of the concerns is what I do with it. Well, anything you want now. So yeah, I agree.
Final question before we wrap up today. I want you to think about your earliest memory of something where you, for the first time perhaps, felt a true sense of ownership. I've given the example of working in a yard, raking, mowing grass, earning a couple dollars, and going to buy a model car because I was obsessed with things that go, and I liked airplanes, but at that point I wanted Matchbox cars, and so I built a phenomenal collection of all these Matchbox cars, hand-picked, and they came in a little briefcase, which Matchbox also sold, and I would arrange them in a certain way. In one day, in a rage of anger, my brother took that briefcase and chucked it out the 11th floor window, and down went the Matchbox cars. And so the question for you is, should I ever forgive him? But before you answer that, tell us about your early memory.
I was 4 years old when I first started earning. I used to love...
That's quite ambitious.
I love lollies. I grew up in a pretty, shall we say, rough neighborhood.
Yeah.
And what I used to do is I used to draw pictures. And according to Myers-Briggs, I'm pretty much 50-50 creative logical.
Okay.
But on my creative side, I don't have any of the traditional creative skills. I can't play any musical instrument. I definitely can't draw. I write worse than a doctor. Like none of those traditional things. But anyway, my really bad pictures. And then I used to door knock to all my neighbors.
Wow.
And I'd sell these pictures for, I think, 5 cents at the time. But back then you could buy one lolly for 1 cent. And so a dollar mixture was a big bag of lollies back in those days.
Yeah. And you were winning.
And so, yeah, that was me.
So you were actually starting in sales at age 4, going door to door and not leaving until you got your 5-piece.
Pretty much. And I've worked pretty much all my life. Like I said, I worked in Tokyo. I pretty much did 18-hour days. It was 8 a.m. till midnight, and I worked Saturdays and Sundays.
Wow.
before school, I was into cars as well. And so I had a nice car, but I had to buy that car myself. All right. So I used to get up every morning at 2 a.m., go to work, then go to school at 7:30, well, finish work at 7:30 a.m., and then go to school.
Wow.
So I could fund my car and put petrol in it as well. My parents didn't give me petrol money and all that kind of stuff, right? So anything I wanted, I had to do myself. And so I was always very independent. My parents put me on a plane by myself when I was like 4 years old, international trip.
Wow.
When I was 17, they played a trick on me. They left me in the desert in Australia. They told me I was going on a holiday, and then they cancelled my return ticket home. I ended up living in a car with 2 pairs of socks on each hand to keep myself warm because I couldn't even afford a blanket, eating macaroni flavoured with soup mix, washing windows in exchange for food, water and gas across a desert. It took me 2.5 years to make it back to New Zealand. So yeah, I think for me, ownership is around accountability, as opposed to assets. My plan is to donate, whatever I earn, or whatever. Everything is set up in a trust, and the beneficiary of that trust are charities.
Wow.
So I've got charities listed, and my goal is to do pretty well and then see that go to good. I'd love to create my own programmable currency that can only be used for good. So programmatic money, smart money that can only do things that help people.
That will be the subject of our next podcast. So look forward to having you back. Thanks for visiting with us.
Cool.
Great to be with you. Much success in your year to thrive. That's all for today. We'll catch you on the next episode. Thanks for joining.